Hi, welcome to another video by Smart Investor. Today, in this video, we are going to discuss an interesting strategy called bull call ladder. This strategy is not a regular strategy, but some cases on certain stocks, we can apply this for a great returns with low risk or sometimes zero risk downside.
This strategy, how have I taken on NTPC and how I made profit and what are the scenarios I have considered. All those things I'm going to explain step by step. I will explain what is bull call ladder. A bull call ladder is an extension by this name is to the bull call spread. A bull call ladder can be set up as below. Buy one lower strike, sell one upper strike like call, and sell another higher strike call like this. Sequence is 160 call and 165 call and 170 call. So these are the three strikes. With these strikes, we build this bull call ladder. I have very well explained all the details in and out of this strategy and the various adjustments in case this stock moves, right? Underlying moves against to us and favorable to us, what to do, all those things in Infosys bull call ladder. If you didn't watch already, please watch this video for more details about this strategy. In this video, I'm going to cover up just only NTPC trade details, what I have taken and how it went well and what is the things. So I would also tell you that this strategy is like a zero loss strategy, downside, or and zero adjustment strategy. So the way we build this strategy would be such a way that we can take some credit or no credit, no debit, or little debit. Such a way we can build this strategy based on the timing. Let's get into more details on that. Before diving into actual details, let's understand the NTPC daily chart pattern, right? So this trade I have taken on 2nd August 22 and I exited this trade on 24th August. So totally 14 trade sessions. Why I have been in this trade for 22 days for longer period, right? Because almost downside, there has been no loss. And number one. Number two, it needs no adjustments. So zero adjustments, zero loss, downside. Downside means up to 130 level. So that time the stock was trading at 155, 156. So most assumption is that it wouldn't go below 130. So that's why I call this zero adjustment and zero loss strategy downside. Of course, upside loss is there. That is unlikely to have that loss. Let's see payoff graph, right? So payoff graph, as I explained this, I bought 160 call and 165 call sold and 170 call also sold. And additionally, so after taking these three strikes, still there is a debit of rupees 1,450 rupees some change. To cover up that debit, means bring it to zero, I sold 130 put. So ultimately, net premium received and paid is zero, which means downside loss until 130 zero and upside loss until 175 zero, right? So this strategy would give me good profit when spot closes between 160 and 175. If it expires between these two strikes, so I would be getting good profits. Max profit is very interesting, this 14%, which is 28,500 rupees. Unlimited loss starts only beyond 175. Otherwise, when you look at this stock, right, NTPC is not a stock like it goes by 10% up, by 10% down. No, we hardly see this kind of scenarios. Bull call ladder is not a strategy to apply every time on every stock. Not a trending stock, not a momentum stocks, right? Only slightly neutral to bullish stocks only we have to apply careful, right? Because we are selling additional call, right? If it takes higher strike and moves 10%, 20%, will be in trouble. So we have to choose particular stocks where we can apply this strategy. So this strategy, what I have taken, right? So I have taken put, but sometimes when you build a strategy, we can build such a way that to receive some credit, sometimes no credit, no debit, sometimes a little bit debit. So we have to build this setup such a way that like that. So that's how it helps to build strategy to have very comfortable zone and a wider range, right? So no loss zone is 130 to 175, and also these four strikes together we can say bull call plus surrounded by triangle, which is 130 and 175. You can think either way you understand, but this is a bull call spread, somebody call spread. Yeah, so whichever you understand, you can call. What is the actual trade data? So on 2nd August, I entered this bull call ladder, 160 call bought, 165 call sold, and 170 call sold. At rupees, I have given the price table. On 4th August, as I told you, right, there is a slight debit is there. So to cover up the debit, I sold 130 put for 25 paise. Altogether, there is no premium I paid or received. So 0. On 24th August, I closed the entire trade for, you can see the profit and loss for totally 9,120 rupees, which just a 1 day before expiry, right? On Wednesday, 24th, I closed the entire trade with 9,120, which is a very reasonable, because margin blocked for this trade is 2 lakh to 2,20,000. Yeah, which is almost a 4% return, which is, I'm happy to that, because I made no adjustment. I didn't have to pay much attention on this setup. Only last day before expiry, I closed, I got the profit. That's all. No tensions on this strategy. Thank you for watching. Hope you understand. It is useful to you for you to understand. Thank you for watching. Please subscribe and comment and like and share if you like this video. We have Telegram group, Smart Investor, where we discuss several live trades and a friendly discussion over various topics, and expert traders also would share their details. Please join us to learn and understand more details.